This is my outlook on the markets for the first trading week of December 2024. The year is about to end, and we'll see what the markets have to offer us in this period. So, as usual, we begin with the weekly calendar to see what economic news releases we can expect during the week. This week has quite a few of them, and they are fairly nicely spaced apart. Also, I think every single day this week has a red folder news event. So, we start with Monday, we see that we have ISM manufacturing PMI. On Tuesday, we have JLTS job openings. On Wednesday, the Bank of England governor speaks. And on that same day, ADP non-farm employment change comes out for the US dollar. That same day, we have ISM services PMI, and the Fed Chair Powell is speaking at 7:45 p.m. my time UTC plus one. Thursday has unemployment claims, and the big one this week on Friday is NFP, as is the case with every first Friday of the month. So there's quite a few news releases coming out this week, so we can expect some volatility. Now, my big plan for trading on weeks like these is to make sure that I am in my positions long before the news release comes out, and to exit before the news comes out, or to get into the trade shortly after the news has been released. So I can take a trade far away from the news. For example, if I want to take a trade on Monday, right, I might take a trade during London session and hope to be out of the trade before ISM manufacturing PMI comes out. Now, if I am still in my trades before the news release, then I have more evaluation to do and I have a decision to make. Do I want to stay in the trade through the news release, or do I want to exit my position? It will be determined by a few things. It will depend on one, for example, is my trade in profit? How much profit is my trade in? So if I have 3R on my trade, for instance, and my ultimate target is a 4R, before the news release comes out, I might just take the profit and exit the trade. If I am in 1R profit, I might decide to hold through the news release to see if the news might push my trade to take profit, right? And if I am not in a trade at all, then I'm not entering the trade 5 minutes, 10 minutes before the news release comes out, for instance. I will wait after the news has been released. If the news does what I was anticipating and trades into my key level where I'm expecting a reaction from, and then gives me the entry, then I'll take the trade. So that's the plan for trading. So same thing on this day, for example, JLTS job openings. If I'm going to be in a trade on that day, I would want to have taken my trade since London kill zone, for instance. The big one this week, however, is that regardless of what I do, all my trading must end by Thursday. I do not want to be in the market around, during, before, or after NFP on Friday. So all my trading must be concluded by Thursday, December 5. Friday is a no trading day for me because it's NFP. Now, what NFP does will likely set the tone for what the month of December is going to do. Let's go to the charts. So, I did a very interesting exercise that occurred to me just a few minutes ago, and you see on my chart that we have a few arrows pointing to certain candles in price. What this is so in the trading industry, Decembers tend to go a certain type of way. We have what we call the holiday rally that sees the stock market, I think for about 2 weeks in December, that sees the stock market rally. And I decided to, hey, let me see what that looks like for pairs that I trade, like euro dollar. And I made a very interesting discovery. So if you go back to 2016, right? So let's start from December 2015. So this arrow is pointing at the candle of December 2015. We can see that it was a bullish candle, blue candle. Let's go to December 2016, red candle, but it had a long wick to the upside. So there was bullish momentum in the month. Then we go to December 2017, also a bullish candle. We go to December 2018, bullish close, up close candle. December 2019, bullish close, up close candle. December 2020, bullish close, up close candle. December 2021 did not have a large range, but still closed bullish. December 2022, big bullish candle. December 2023, big bullish candle. So, interestingly, in the last 9 years, every single year but one, and that was December 2016. Even that still had huge bullish price action. It only closed bearish. So every single December in the last 9 years has had bullish price action. That's interesting to note, seeing as this black candle is November's candle, and the candle that we're entering that is about to start printing from tomorrow, Monday, December 2nd, is going to be trading after price had traded into this huge monthly fair value gap and rejected. So we can see that the month of November had this very big range. What was the range of the month of November? November traded about, look at this, 594 pips. Essentially, November traded 600 pips to the downside, but immediately after trading into the monthly fair value gap, what it did was it reversed, going back into the range. It reversed by about 244 pips. So almost went back 50% of the range. What does that mean going forward? Now we can see that the last 8, 9 Decembers have had up closes for the euro dollar, and we are trading off of a monthly fair value gap, and the month of December is about to begin. Just observing tells me that this December might see some serious bullishness on the euro dollar. That said, that is the only thing it is. It's a seasonal tendency that I'm going to be aware of in my trading. I don't trade what I think the market is going to do. I don't trade what the market is supposed to do. I trade what I see the market doing. So, although this sets the tone for my expectations in December, I'm expecting some bullishness on the euro dollar. It does not mean, for example, that I will not take any short trades, regardless of how good the setup is. The month might have an up close candle, but in between, remember this is the monthly candle we're talking about, there might still be short term bearish trades. How will I know? Well, we go down to the weekly. Now, my bias is going to be determined. Now, on the weekly, of course, we can see this beautiful weekly engulfing candle. This was last week's candle, engulfed the body of this candle after price traded into this monthly level. So that is already a bullish indication. I can have a bullish bias going into the week. But price is about to be tested. Its resolve to trade higher is about to be tested by, first, this bearish weekly fair value gap, then secondly, this bearish weekly fair value gap. Depending on what price does in and around at least this first bearish weekly fair value gap, I will know if I want to hold a bullish bias for the rest of the month of December. That said, if this bearish weekly fair value gap gives me a bearish signal, I will take it. Here's why. If I go down to the daily, I can see that this week traded bullishly, and price has now approached. So we have this relatively equal daily highs, this candle, sitting beautifully at the base of this weekly fair value gap. Price has not yet tapped into it on euro dollar, so price is about to test this weekly fair value gap. Now, on its way up, price has created this bullish fair value gap visible on the 4-hour. So in this range, what we can see is from this low to this high, this bullish fair value gap is sitting very nicely around the 75% retracement range. Now, price is about to trade above these relatively equal highs and tap into a weekly fair value gap. If price is going to retrace, assuming that price is still going to be bullish, if price is going to retrace into this 75% range, for example, into this 4-hourly fair value gap before continuing the move higher, what better place to do it from than right after taking out these relatively equal highs and trading into a weekly fair value gap? Therefore, if on Monday or Tuesday or Wednesday, price takes out these highs, you see I have an alert set there to trigger me in, and during the appropriate session, let's say London kill zone, New York kill zone, I see price do something like this. And then on the 15 minutes, I see an engulfing candle. This will be my signal to take a short trade. My target will be 3R or this 4 hourly fair value gap, depending on what I see price do. So my potential trade might look something like this. Now, of course, if let's say price trades up into the level and just keeps blasting through it, creating more bullish fair value gaps, then I would look to take continuation bullish trades from within those bullish fair value gaps to then come higher and test this new weekly fair value gap. So this is what I will anticipate. Of course, if this first bearish trade that I talked about, so this one, if this trade works out, for example, and does something like this, then I will look to take a bullish trade out of here, since my overall bias, just looking at the last 9 years of price action, is bullish on euro dollar in December. That's essentially it. That's my trade plan for this week. I will carry this bias to GBP, USD, gold, NZD, USD, all the pairs that I trade. So we can see that on gold, we have this daily fair value gap sitting inside this weekly fair value gap. So that might be a point that will test price, that might push price a little lower. Now, of course, on its way up, price has now created this daily fair value gap that we can see here. So there's this daily fair value gap from here to here. Let me give it the appropriate color code, red. All right, so let me declutter my charts a little bit. None of these fair value gaps is important anymore. This one has been traded through. This one has been traded through. This one is still there, but there's a daily fair value gap sitting on top of it, so it might not push price. Now, these highs have been traded through, and so yes, these are the only portions of my chart that I'm still interested in. So price might again trade higher into this daily level, then trade lower, or just trade lower, come into this daily fair value gap, and then go bullish from there. Gold, I'm really not interested in for the rest of this year. I really couldn't care less what gold does. New Zealand dollar, similar situation. New Zealand dollar does not have a lot of fair value gaps, but we can see there's one daily fair value gap here. And so if price trades lower into it, I might take a long if the risk to reward on New Zealand dollar is better, for example, than the risk to reward on gold, on Euro USD, and GBP USD. That's my outlook for the month of December, but starting with the first trading week of December.